All right. Perfect. All right, let's go ahead. What's up, everybody? Welcome back. I'm here and I'm really excited because I have yet another fellow Canadian on the show, but this one's coming from a special place out on the East Coast. He comes all the way from Toronto, Mr. Commodity Context himself, Rory Johnston. Rory, welcome to the show, man. How is everything in your world?
Thanks for having me, Justin. Things are reasonably cold here, but thankfully not quite as cold as they've gotten out in Calgary, thank goodness. But other than that, we're just starting off a fresh year with on my end plenty
Yeah.
of family germs and a range bound crude market it's keeping everyone guessing.
It is, man. No, it's and then we'll get into all that good stuff. But we were kind of messaging before, and you're like, I'm at home, I got three kids, I'm on the back end of this cold. But I mean, I'm sure for years you worked out of an office. I mean, what's it like working full time at the house, man? And then especially with the young kiddos, because they don't know how to differentiate dad being home for playtime and dad being home for work time, right? Like what does that look like for you, man?
Yeah, and just to kind of give you a very, very brief backstory of how I kind of went from corporate to working from home full time here.
Of
So I
course.
was
Yeah.
I led commodity economics research at Scotiabank for 6 or 7 years, which was, for those unaware, Scotiabank is one of the big kind of major banks in Canada, and typically the one most strongly associated with commodities, the commodity space, and both out west in the energy space, but also through Latin America in the mining space. So I did a lot of work there on broad space commodities, although oil and gas, and specifically oil, were always my favorite things to kind of work on, and that's what I came that's what I really came to do.
Mhm.
After doing that for a while, and very frankly, after the better part of a decade of seeing the industry get ground down and everyone I know kind of in my broad orbit in the financial services space, in the energy space, kind of getting laid off or transitioning. Very frankly, I was considering a kind of a bit of a move out of oil. And at the beginning of 2020, just around when we were having our first child, I left Scotiabank to join a small family office and do broader kind of equity and quantamental research work.
Wow.
And then, funny luck should have it, obviously we had, a once in a century pandemic. Everything kind of shut down. The strategy we were running was no longer the strategy we were, confident in those conditions. So I found myself with a lot of spare time. And at just around that moment, of all that happening, obviously commodity markets, and specifically oil, went completely nuclear. And I had a lot of my former contacts from media in particular, and a lot of what I did at Scotiabank was media work, a lot of credit work, et cetera. But I was also the main spokesperson for the bank's view on commodities and oil prices, et cetera, to the various media outlets. So they called me and they were like, Rory, what the heck is going on? And I'm like, look, I'm now with a small family office. There's not even a website. Why do you want to talk to me? I'm sure there's other people out there.
Yeah.
And the fact that they kept coming to me was my signal that honestly there was an opening in this space for someone who liked talking about this stuff in a conversational way, who could try
Yeah.
and explain what was going on. So I started just keeping up what was happening in the oil and gas space, even though it wasn't a core part of my day to day anymore. And
Right.
then that kept going until I'm like, well, if I'm reading and following up on this stuff, why don't I write it down? And if I'm writing it down, why don't I publish it? And that's essentially how Commodity Context was born, was as a side hobby project while I was working at a family office.
Yeah.
And eventually, that it took a little while to get going, but after a year, things accelerated. And then I was like, well, will people pay for this? And I should also say, like, back when I was at Scotiabank, we never had a great view on readership metrics or engagement or any of that stuff. So it was always a cost center. I was just published and it just went out into the ether. And I had no idea what was really happening with it. Now
Yeah.
that I had a much bigger focus on what was happening with my research, who was reading it, how many people were subscribing, et cetera, I'm like, okay, well, will people pay for it? So then I turned on a paywall, thankfully, and I will remain eternally gracious, grateful to this day. A lot of people signed up and paid for it. And
Wow.
enough people did so that I was able to leave the family office. And now I'm doing commodity context full time.
Man.
Um, and I'm really, really, really enjoying it. It's a lot of the work that I wish I had time to do when I was at Scotiabank,
Yeah.
Obviously, with this renewed, fascinating environment we find ourselves in crude oil and refined products in particular,
Yeah.
um, and just doing it full time. So to your question about, now I'm at home full time, that was definitely a curveball as well. We had recently bought a house in the city just before COVID, planning on my wife and I both still going down to work. We worked downtown in the core. The house was reasonably small. We now have 3 children, and the house got noisier and noisier and noisier. So we ended up moving, and I thankfully have a place now with a little office in the back.
Nice.
And this has been revolutionary for me. But I think to your point, one of the things that's been really hard is I think, while I am so grateful to be able to see my kids, they're all boys, by the way. So see all 3 of my
Oh man.
boys all the time. And that's been so awesome. But I feel
Yeah.
terrible sometimes because I feel like I also say like no to them more frequently because
Uh,
it's like, well, I'll come in and grab a coffee. I'm like,
yeah.
oh no, I can't play. I'm working. And I
Right.
feel like if I just wasn't there at all, I wouldn't have that engagement, but I also wouldn't have like that moment of interaction with them, but I also wouldn't have to say no. So it's
Yeah.
very much a mixed bag, and I'm still trying to figure out how best to navigate it. But I'm
Yeah.
sure a lot of people are dealing with this now, given that a lot of people now work from home part time, if not full time. And I think
Yeah.
this is just a whole new generation of kind of work life balance in a way that I had never really expected it to be.
Yeah, no, and I appreciate the context, no pun intended, and the color behind it. Because I was going to ask you about your origin story, but um, I've had so many people on the podcast over the last few years that are similar age, young parents who work out of the house, who after the pandemic decided, you know what, like my hobby is now turned into a revenue generating business, and let's go. And to your point, it's like just juggling the at home, and because when my so similarly, young kids, my daughter's 8 and I have a 5-year-old son now. But at the time during the pandemic, he was like 3 and well, 2, 3, whatever. And
Yep.
it was like he wanted to play all the time. And he's like, but dad, you're
Yeah.
you're home. And so, but it was very much understood and accepted. Like if you're on a Zoom call or something work related and kid comes up and like smashes the keyboard, and it's like, okay, well, we're all working from home. But now that
Yeah.
it's like sort of evolved into like this hybrid deal, and then yeah, like even to your point, like I've got my little office at home, and I'll come out and go into the kitchen, and then automatically, if like my son, because he's still in preschool, so he doesn't go to school every day, but if he sees me, it's like, dad, come do this. And it's like I
Yeah.
hate saying
Fair
no.
game, right?
Yeah, exactly. And so it's like, oh man, like I feel so bad. And and then because it's like, oh well, he'll only be this age so often. And then next thing you know, it's like an hour blows by and I'm like, oh geez, I'm like, I gotta get back to this. Like I got a deadline, or I've been trying to get this thing done. And it's man, I can just imagine. So you got a little house in the backyard or something, or like a little office?
Yeah, a little converted garage, which has been
No
fantastic
way.
in terms of just a little bit of isolation and was honestly the main reason we moved. More
Yeah.
kids, everyone at home. My wife also works from home with me. So my wife and I
Oh
help run
boy.
my wife and I co-run the business, and my
Ah,
wife is a full-time stay-at-home mom with the kids as well. So full time, all the time, always rolling. It's been an adventure. It's been exhausting, but I think extremely, extremely rewarding as well. So
I
I
love
am
to hear
so,
it.
so thankful to be in this position.
Yeah.
But man, tiring.
Oh man, that's great. No, well, you seem to be managing it quite well. And so before we get going, I'm super curious. You've obviously got a little library in the back there. If you were to give one of those books away as a gift, which one would you give?
Ooh, 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 ooh. Putting me on the spot here.
I know.
There's so many good ones. I think, if you're looking at more recently, where did it go? And now the one I thought I was thinking of isn't even here. I mean, if you're looking at, honestly, the classic example, and I think the book that I started with, and I think so many oil and I start with, I found like an original edition of the Prize
Oh
by Dan
yeah.
Jurgen, which I think is obviously that's how I started. I
Yeah.
actually gave this book to my wife when we first started dating, and yeah, I'm a huge nerd. And to the point that it actually came up in our wedding speeches
No
from
way.
one of my wife's bridesmaids. She was like, well, when my wife's name is Justice, when Justice came home holding a book on oil, I knew something was weird. So my wife's background is development economics and kind of development work. So like very orthogonal to her normal reading.
Yeah.
So I think that for me will always obviously hold a special place. But I mean,
Yeah.
there are so many. Super Forecasting is a great book in terms of thinking in probabilities and
Okay.
thinking how to think about forecasting.
Yeah.
Um, there are just so many. Obviously, Bob McNally's Crude Volatility. Bob McNally is the founder and president of Rapidan Group, a good
Okay.
friend, and they've that book is fantastic on the history of volatility in the space and how supply is
Wow.
managed. But no, I mean, I could honestly have 1,000 different books I would recommend. I've been really big recently into and honestly, dovetailing into the parenthood discussion, actually, I sadly have not actually read a physical book since the beginning of COVID, since we had our first child, because like there's just never a moment where you're like, I'm so relaxed that I'm going to I'm going to sit on a couch and read a book.
Right.
Um, so but I've actually increased my intake of books probably by 3 or 4, and I'm a huge
Wow.
audiobook junkie now.
Okay. Yeah.
And particularly in the biography and industry history space. So like one of the ones that was really good recently was Cokeland, which is the
Okay.
history of Coke Industries.
Yeah. I listened to Tim Ferriss interviewed, I think, one of the original Coke members or family members, and what a fascinating story. It blew me away. So
Yeah,
yeah, that's one I'll have to check out.
yeah, and obviously, the it's almost just like a cliche to say right now, but shame on me for not mentioning it. The Javier Blas and Jack Farchi's The World for Sale is absolutely fantastic about the history of
Okay.
commodity traders. Picks up a lot from where the King of Oil, which is the history of Mark Rich.
Oh yeah.
And Mark Rich and Co. was the kind of initial company that really started the spot oil market in the first place, and actually birthed Glencore and Trafigura and all the companies that we now think of as essentially running the global commodity market. These physical traders,
Huh.
kind of the histories are fascinating. So anyone that has an interest in this space, I think you can absolutely just dive right into the biography side and have a great origin story.
That is so cool, man. I appreciate you like sharing those stories and books and stuff. And man, I mean, you've got a solid library there. And are you good? Like, well, actually, let me ask you. So, growing up, being in Toronto, like, at what point did you realize this was kind of your interest? Were you always interested, like, into economics and finance, or like, how did you, as a young kid, figure this out, or was it not until you were an adult?
I have a very weird and zigzaggy path for how the heck I got here. And I actually didn't grow up in Toronto. I grew up in Kingston, which is
Oh
even
yeah,
further conceptually from the oil patch.
yeah.
I don't think oil has ever really been mentioned in Kingston. So
But they do use some of it, I'm
they
sure.
do use some of it occasionally.
Yeah.
Um, so I went to university. My background, I like to say I played an economist on TV because I actually really don't have a formal economics background. I started as a philosophy student.
Oh
Um,
wow.
but my main focus ended up being political studies and particularly international relations and security studies. A
Ah,
lot of history, a lot of security, et cetera. But I initially came to the oil space reading the prize, as I think so many fledgling analysts do. And as I started out, and my focus was very much on this idea of energy security. So I was very interested in like, classic stories of like how, Winston Churchill made the decision to switch over the Royal Navy from Welsh coal to Persian oil in order to have an advantage over the German fleet. And that was, they traded up in terms of capabilities, obviously faster, lighter fuel, higher energy density, all these things. But in exchange, they went from having an essentially unlimited supply of domestic Welsh coal to having these really extended supply lines that then needed defending, and to Persia, now Iran. So I found that fascinating, and that's how I really got into the space. So when I
okay.
went to grad school at the University of Toronto's Monk School, that was kind of what I went in with an interest in, was this idea of energy security. And I had initially planned, honestly, to take a job in the security space, and then after time, I realized, as I became more realistic about my job prospects, that energy security is not really a great entry level position. There are like, like two guys in Ottawa that do this work, and they're like 60-year-old guys in the basement of like, Department of National Defense.
Yeah.
It's not exactly, there's not a huge amount of openings in the entry level. So by happenstance, I was introduced to the chief economist of Scotiabank, and I mentioned my fascination with the energy kind of economy, and how, rather than like, monetary economics, how you have like this very physical, like, supply chain that determines the value of this massive commodity market.
Mm.
So I was hired to in the as a junior economist in the economics group to just start writing about and doing more work around energy. And I learned economics kind of on the job, if you will. And I remember like asking like very, very basic questions that would have made, a graduate of an undergrad in economics, blush for how silly they were to ask. But like I really didn't have that background, and I learned it on the job, and I'll be forever appreciative of my economics coworkers at the time that were very gracious in teaching me all this in real time.
Yeah.
Um, but I also feel like because of that, I approached the way I thought about the market, the way I think about economics, very differently from someone who was born, raised, kind of bred and educated in the space. For me,
Yeah.
it was always about simplifying it dramatically in
Yeah.
order for like that I could understand it at the time. And I feel like that's just how I have ever since approached the market.
Mm.
You can do 8 million different complicated things, but it always has to flatten back to a simple number.
It does. And to
Yeah,
on that point, I think it's fascinating. You really touched on something interesting is that I think a lot of people are, and this ties into a whole nother topic, but a lot of people are interested in the idea and concepts of economics and commodity markets. But the challenge is like most people that live in that space who try to educate or inform do it at such a complex technical level that they have a hard time bridging the gap to which then the general public are maybe reading headlines from news media outlets and something, and then they're drawing their own conclusions on how this stuff works based off of media versus people like yourself who actually understand. And so it's, people like yourself who can take complex topics and then articulate it in a simple manner for certain stakeholders or an audience or something like that, I think is the very key for advancement, to help educate people. And like in oil and gas especially, like we have a tough time like like communicating our message to the public,
yeah.
because it is very technical, and then we try to baffle them with how smart we are, but then it's like, well, no, like that's not going to change anyone's mind. So to your point, simplifying it in your experience going in and asking those like dumb questions are the very questions that most people want to ask, but they're too afraid to. And so I think you come at it with a very interesting perspective that can hopefully then help you in what you're doing now.
No, totally. And one of my pet peeves in this space is how like someone will just like you'll ask a question and they'll just dump a massive amount of technical jargon on you. And there's definitely a place and time for technical jargon. Jargon has a reason. It's a simple it is itself in many ways a simplification so that experts can communicate very quickly about complex topics.
Yeah.
Um, but I think that, if you are hiding behind the complexity, you
Mm,
probably just don't actually understand it well enough yourself and you're using that as a crutch. And I think that when it really comes to your point about like explaining why this is important for the general public. I remember when I first got into oil, like I literally took an online organic chemistry course because I'm like, what the heck is happening here? What is happening in a refinery? What like how does any of this work? Um, and it was for me, it was just like I loved the complexity, but the majority of people that, use petroleum products in their everyday lives shouldn't need to learn that complexity. That's
right.
why we have specialization, right? And I
Yeah.
think it's know what the important pieces are and what people should know and like flatten out all the rest of it because like you and I can talk about it till the cows come home, but I think for, my family members, like they don't
Yeah.
need to know they don't need to know the complex makeup of natural gas liquids, or how, ethane rejection works and torques the liquids balances, and it's impossible to follow stuff half the time. So I think that it's important to know, it's important to understand that stuff so that you can understand when weird things are happening and what's really happening under the surface.
Yeah.
But for the purpose of simplifying it for people that don't have to do the work, I think it's our jobs as analysts in this space to do the hard work so that other people don't need to.
No, that's a good point. It actually kind of leads into my question that's been on the top of my head is like, from your perspective, like what are some of the most misunderstood aspects of, say, oil and gas commodity markets by the general public?
Whew. I really, I guess it depends on like how you define general public. But I think one of the things that I think is always a funny thing, and this is honestly the way that you'll often see even media talk about it, is let's say just for nice round numbers, again, keeping it simple, let's say the world produces and consumes 100 million barrels a day of liquids right now. I
Yeah,
think that in and of itself will probably be the second piece I talk about, is like, what the heck is a liquid? But let's just
sure.
say oil, 100 million barrels, consumption, production, nice, easy, round numbers. Um, People will say like, oh, well, this is happening, and, you lose 1 million barrels a day of production. Oh, well, that's only 1%, not a big difference.
Right.
But one of the cores of commodity markets is that they price and solve and balance on the margin.
Mm,
So, you know, like 1 million barrels a day is a huge difference, given that in any given month or quarter, you're really plus or minus 1 million barrels a day in most normal, non exceptionally weird quarters. COVID, we've seen plenty since. But like in
sure.
most kind of pre 2020, you're plus or minus 1 million barrels a day in most periods, anyways, which I think is itself actually a remarkable achievement of stability, that you can have so many crazy volumes of tens of thousands, hundreds, maybe even millions, depending on how you calculate it, of these producing assets globally,
Yeah.
and billions of consumers, and we happen to be plus or minus 1% most of the time. It's actually a remarkable achievement,
Yeah.
just for how balanced that is. So I think one thing is that markets like this balance on the margin and price on the margin. So even if you lose a 1%, that doesn't mean there's going to be 1%, 1 percentage point of movement on the price. It could mean 30 percentage points movement on the price, and that's entirely justified. So that's the
Wow.
one thing I would say. The
Okay.
second thing I'd say, and this is when people get like right below the surface of like general population, is when you talk about like what actually is in that 100 million barrels. And I think a lot of people get really thrown off that, some of it, the majority of it is crude oil, maybe let's say 80 plus million barrels a day, but a lot of it is also natural gas liquids. A lot of it is, which are typically derived not from crude oil, but from the processing of heavier gas in gas
Hmm.
processing facilities. And then you strip out the ethane, butane, propane, et cetera. And that is, again, those are added into the liquid stream, but that's counted as oil in most of how we test the market. And also same with biofuels.
Right.
Um, you know, whether it's ethanol or renewable diesel or whatever else. I think all of these things, and this is constantly changing, and most of that evolution of what we consider to be a liquid, that has changed much more radically over the past decade or two than
Ah,
the most of the rest of the industry, which has much more been kind of crude focused. And a lot of this is actually, you're obviously taking this call from down in Houston, the U.S. shale revolution and the explosion in the production of lighter crudes, but also liquids heavy gases, liquids heavy natural gas, has completely revolutionized how we think about supply, which
yeah.
also makes it really, really tough to track, because it's like half a counting exercise and half chemistry experiment,
Yeah.
which makes tracking that hydrocarbon along a kind of a spreadsheet increasingly tricky.
Yeah. No, it actually you reminded me of something recently that I've seen. I'm assuming you're familiar with Doomberg.
Yeah.
Yeah. Are you familiar with Art Berman?
Yes, I have
Have,
been seeing a little bit of this back and forth.
Okay, I've been watching with my popcorn in hand. Yeah, it so and again, this is not the world I live in, although I read up and much to try and pay attention, but it was just so because like Doomberg was basically, and this is not about them, but I'm curious, the NGL piece, that is considered part of the oil supply. Is
Yes,
that right? But it
that is
comes
correct.
from the processing of gas.
Correct.
Right.
Predominantly, you could also, I mean, you typically also do get some natural gas liquids, or technically hydrocarbon gas liquids from refining crude oil and particularly lighter crude oils in a refinery. But by volume, I think it's 90+% comes from the processing of natural gas.
Right.
Um,
Okay.
Now, the reason this matters is I think a lot of people, and this is where I mean, you stop me if I'm getting too wonky, for this conversation. But
Okay.
in terms of obviously, you don't refine or you don't typically refine natural gas liquids in a refinery, right? They
Okay.
are themselves kind of, in most cases, some kind of finished or adjacent to finished product. Maybe they could be blended, etc. We'll get to blending later. But so when people think about crude oil balances, they think it's incorrect to include natural gas liquids when thinking about it in that way. But on the flip side, I think one of the things that irritates me in this overall debate is people will say, well, you can't count natural gas liquids in oil supply growth. But then in the same breath, they'll kind of turn around on the other side and say, oh, but global oil demand grew by 2+ million barrels a day. Well, a
That's what I was.
lot of that is actually natural gas liquids demand growth,
That's what I was.
in terms
I
of
was thinking of.
petrochemicals. Exactly. So I think it's the reason we think about the market in terms of total liquids rather than, in most cases, crude versus crude is in many cases it depends on how it's being used as to how it should be counted. Now,
Uh,
one
good
of the
point.
things that has further complicated things more recently is that, particularly stateside, given a very large volume of particularly some of these, call them heavier natural gas liquids, things like C5 plus or pentanes or natural gasoline, depending on who you're talking to. Um, those have been increasingly being blended into crude barrels after the point of production, which makes the data really tricky to parse. And one of the debates that people have had is about how EIA data has been counting crude oil.
Mm,
And again, I think they're one of the misunderstandings or misappreciations for what's happening is people also misinterpret, whether it's purposefully or by accident, um, they kind of flatten the distinction between production and supply. And I think that's a really important distinction depending on how it's
yeah.
being used. And in the case of the EIA's, what they call the crude supply adjustment, which gets all of this kind of controversial play, the issue is that you're getting blend of natural gasoline, as an example, into the crude supply stream. But people think that then it's being counted as production. But no, it's the production is one thing, and then you're blending in some of this natural gasoline after the fact, which then gets either exported as crude or put into a refinery as all crude. And that throws all the numbers off when you're trying to balance it out at an individual product basis. Anyways,
Right.
I've gone so far down a rabbit hole. I'm going to try and pull myself back up here.
No, this
But
is good.
all this to say, I think that, when you go, the liquids accounting and the oil market gets so convolutedly complex so quickly.
Yeah.
I think one of the important things is that if you're going in looking and trying to understand this stuff, it is critical to go in good faith. Don't
Mm,
go in trying to find an answer because there's so much going on that you can usually piece together something that kind of supports your case
yeah. Right.
rather than going in to say, like, I have no idea what's going on here. Like, let the data talk for itself. And I think you come to very different conclusions. And I think a lot of the debates we have right now are people coming at the exact same data with different priors and different purposes. And I think that is one of the things that I think is problem in this industry right now because there's so many legitimate uncertainties and debates to be had with the ongoing energy transition and where demand's going and all this stuff. But then we end up spending all of this time debating EIA data. And it's
Right.
like, that's just, it's honestly a bit, forest for the trees, honestly.
Sure. And so, but I think when it comes to decision making, either inaccurate or misinterpreted data can really impact decision making in commodity markets. So, how do you sort of approach this?
I mean, that's a lot of what I do. I mean, I describe commodity context as a data driven and visualization forward oil market research service, and I really do start first and foremost with the data. I try and pull it all from as primary a source as I can get.
Yeah.
I compare and contrast estimates of, let's say, production of a given country between three, four, or five different sources to see like where is their disagreement. Because you'd be shocked. Not just like I think people would expect that people will have different forecasts for the future. Sure. But people have different histories. People have different historical data for, let's say, what US demand is, or heck, Canadian supply, or Canadian
Huh.
production, if I'm going to be specific with the data. And I think that's the challenge, is that, I think people just assume that it's like other markets where you have, like, let's say in the equity space, you have like literally legally confirmed data that people are working off of, a common reference point for history. Let's say it's like, Exxon's cash flow or whatever.
Yeah.
Versus in the fundamental analysis of the commodity space, a lot of people will treat the IEA's history as the common leveler, but there are still, I think, legitimate disagreements over the histories between a lot of different sources. So I like to try and appreciate those differences and see if, rather than confusing myself even further, like
Mm.
do those differences of estimates, do they provide additional insight for what's going on in the market? So, like, let's say, for instance, one source says the market was totally balanced in a given, let's say, year, but or a quarter, and another one will say, that we're 1 million barrels a day oversupplied, and let's say during that quarter, prices fell off and calendar spreads flipped into contango. Well, then you're probably, I think, reasonably, in good standing, or have a good justification for saying, oh, well, actually, maybe the source that was saying that we were oversupplied in that corner was right. And
Hmm.
I think ultimately fundamental data, I think, provides us with, and by this I mean like supply, demand, and balance data in the market. Um, when It provides us with a one view of what's happening on an immensely complex overall industry. But at
Yeah.
the end of the day, I think these are best estimates at any given moment, and they change over time. Whereas the market data will be your kind of your truer. You will always true up to market data at one point or another.
Yeah.
If we have prices collapsing and calendar spreads, by which I mean the shape of the futures curve flipping and kind of collapsing into contango, which as an analyst I see as evidence of a oversupplied spot market. That for me is like, well, first and foremost, I should try and figure out why the market is saying that we're so oversupplied, even if my data is saying that we should be tighter. I think
Yeah.
I can have huge faith in my data, but if the market says that that's wrong, I'm going to trust the market because it's actually trading on real time data with real people in the market, real participants in these
Yeah.
markets making real transactions.
Yeah. No, that's a good point. And I'm so curious because I've often heard like, the US, I would say, well, again, from my opinion and experience, like the EIA is for the most part, like you can kind of rely on it. And, for
Yeah.
people like myself, it kind of helps make decisions. But in terms of like overseas, when you're looking, because when you put out your deck and you have like all the OPEC countries, and basically just like an international deck. I mean, you have all the countries in there from OPEC, OPEC plus, and all the rest of it. I mean, is that like you like, and you obviously you don't want to, a magician never reveals his secrets, but do you have like some really interesting connections overseas, or is a lot of this just online? Like, how have you sort of like gone into that sort of part of the world to then be like, this is what I believe is like the most accurate?
Yeah, and I'm very happy to reveal my secrets because it's honestly just a lot of data grubbing work. So to this point
Huh.
I was saying about how, like, I try and get a bunch of different estimates. So, like, each country in most cases will have a statistical agency. In Canada, you have Statistics Canada, but you also have, at the provincial level, you have the Alberta Energy Regulator. You have the Canadian Energy Regulator, which is at the federal level but is separate from StatsCan. And each of them have their own data and their own kind of fundamental series of, let's say, production and consumption or whatever. And most of what I'm doing every day is data reconciliation, is
Ah,
comparing and contrasting these estimates to see where they agree, where they
right.
disagree, and where they make no sense at all. Um, and what I've done over the past couple years now is built a bunch of systems that essentially, scrape this data from all over, mostly web based, of a bunch of different sources. In terms of global, I mean, you have, the EIA has good data, obviously the best data for the United States specifically. But then it actually also has estimates with the, let's say, the short-term energy outlook, which is, or the
Yeah.
STIO, is its kind of global view. And actually, like, that's free for everyone and is
Yeah.
honestly really good.
Yeah,
Ver
I like it. And then their
Yeah.
international energy outlook as well
Yep.
as seems to be pretty solid. I've used that before, but anyway,
Yeah.
yeah,
And like, again, I will disagree with particular bits and pieces of it, but as a general framework, it's really good and it's free.
yeah.
And I think obviously the International Energy Agency publishes its oil market report. That is also obviously in many cases considered the gold standard, but is not free.
Hmm.
And then OPEC itself has its monthly oil market report, which has a similar thing. And each of those has a bunch of balances on the global supply demand levels and forecasts for it, et cetera. And one of the things I do is compare and contrast those forecasts to see where they agree or disagree, just like I compare and contrast historical data to see where they agree or disagree. So my
In,
my
in
my, my process is very similar across the board.
in your sort of approach and the way you do that, have you noticed any themes or trends when you compare those three major ones, like on the high side, low side? Like, what have you noticed, say, over the last couple of years that you're like, yeah, this is pretty standard, and I can just assume that X is much higher, lower, whatever.
I think it would not surprise a lot of people to hear that OPEC is perpetually bullish.
Yeah.
I think, and I think it's interesting is, when you pull back the curtain. I think it's interesting to understand why they're bullish in their numbers. Is that typically their demand expectations are really strong. Last year, demand ended up being really strong, and they were more right than a lot of the other market watchers.
Oh
Um,
yeah.
but I think in some ways almost right for the wrong reasons, because it wasn't exactly the specific countries that they thought were going to grow faster. And when you look at the actual models, let's say comparing, contrasting OPEC's demand expectations versus the EIA's expectations in the STIO, again, both free and open, so everyone can kind of go look at them themselves. Um, when you look at you'd expect the disagreements to be around like China, where it's obviously a huge question, and I think a lot of legitimate debate there. And those actually there's some difference, but the major differences are actually in the smaller regions that no one pays attention to, like how much Latin America is going to grow in demand this year, or the Middle East, or Asia, excluding non-OECD Asia, excluding China and India. A lot of these regions and areas where a lot of analysts will essentially basically just put a plug in, because you're not really watching that. You just assume it's going to grow by X percentage, right?
Hmm.
And in those models, OPEC's models assume it's going to grow by a larger X percentage than the other models. And that actually explains, apologies,
No worries.
explains a lot of where they get this structurally more bullish view on demand. So that's
Gotcha.
the one thing I would say. The other thing I would say, one of the big themes of last year is Chinese demand growth was astronomically strong. But unfortunately, China doesn't actually publish demand numbers,
Okay.
unlike virtually every other country on Earth. Um,
Huh.
so my numbers, and essentially what a lot of analysts do, is they create what they call apparent demand numbers. And when
Uh,
you think about how a national petroleum economy should work, you can essentially treat demand as essentially whatever is left over in the economy at the end of a given period. So you produce X amount, you import Y amount, you export Z amount, and the net of all of that, with plus or minus a little bit for inventory inflows, but
yeah.
whatever's remainder should roughly be demand.
Yeah.
Um, and one of the things that I and other analysts have noted last year is that none of the major agencies are putting up numbers for Chinese demand growth right now that are as anywhere as high as the apparent demand numbers show. Now, some people will
Um,
explain this way by saying that they were building massive strategic inventories, but it seems a little too big and too sustained and entirely on the refined product side, which is itself also weird because China has historically built crude, strategic storage. But so I think this is a big debate, and as just in terms of rough numbers, um, a lot of these agencies see Chinese demand kind of reaching maybe 17 million barrels a day by the end of this year, by the end of 2024. Whereas I had China up around 18 million barrels a day at the end of 2023.
oh wow.
So we're talking huge gaps. And if you look even at the history, in many years, or particularly in many quarters, you could have a million to 2 million barrels a day of difference between these
Hmm.
different sources for what they see Chinese demand to be. So when you're
So
looking at, sorry,
so what is as it stands like at the end of 2023? What was Chinese demand or apparent demand?
so we don't have final end of 2023 numbers yet, but
Oh,
as
okay.
of the latest numbers I published are in would it be October? Um, oh, and yeah, so October, I had Chinese demand at 17.3 million barrels a day, but
Okay.
September was up around 18 million barrels a day. These are like much, much higher numbers than a lot of the other agencies are showing. And I think I even wrote a piece last year called Chinese oil demand doubts,
Yeah.
um, because the numbers were too high for me to believe.
Hmm.
And I explained part of this away by saying that some of it could be strategic stock building, there's all these other options, but the demand remained just way too strong for way too long to be, in my opinion, this kind of figment of stock building.
So
Um,
where do you think that so where do your what is your sort of crystal ball or magic mirror say towards the end of next year or this year, I guess?
the hard thing about China right now is that I still don't fully understand why Chinese demand grew as strong as it did last year, which makes it really, really hard to say how strong it's going to grow next year,
Yeah.
or sorry, through the remainder of this year. But I would say that last year Chinese demand, depending on the numbers you're using, up by 1.5 million to 2 million barrels a day year over year, which is a huge, crazy high growth number. Now,
And what's
part of that
driving that growth?
yeah, so part of that is because 2022 had this, the end of the year in particular, this really low base effect because that's when the Chinese government and Beijing implemented COVID zero policies, and that
Yeah.
kind of shut down the entire economy. So that base effect, that growth is a little bit juiced by that.
Yeah.
But when you're looking overall, you're looking at what individual products are driving this growth. You're seeing strong demand across the board, but particularly strong demand for things like naphtha, which is used as a petrochemical feedstock. So
Yeah.
when you're talking about, and this is again when we get into this question of like natural gas liquids, a lot of the demand has actually been growth in various petrochemical feedstocks. So when
Uh,
even globally, while you have like in the United States as an example, you have seen weaker growth or weaker performance in gasoline and diesel. You've seen stronger performance in a bunch of these, chemical industry precursors. That I think and this is like a theme that a lot of longer term outlooks expect to continue, which is even as we gradually electrify transportation, et cetera, and we potentially see a peak in gasoline demand, any peak in petrochemical demand is going to be way further down the road because we can't electrify petrochemical feedstock. It doesn't even make conceptual sense.
right.
Um, so and that's because it's transformation demand rather than combustion demand, and I think that itself is also very different. So I think all of these things kind of come back and forth. And anyways, all that to be said, China is, I think, going to be a major question for this year.
Yeah.
And really, if we're talking about like big, big numbers, where does Chinese demand grow? How fast does Chinese demand grow? And on the other side, how fast does U.S. supply grow? Because U.S. supply last year was the major upset for the entire industry and particularly for OPEC. When
Yeah.
you look at, I'm just pulling up one of the things I do is I track each of those forecasts by all those three major oil agencies.
Yeah.
They all have, here, they all kind of publish and they publish each month, right? So you can see how those forecasts evolve over time. So
Yeah.
at the beginning of last year, the EIA was expecting US liquids production to grow by about 0.8 million barrels a day, or 800,000 barrels a day. Whereas at the end of the year, the data was showing it more like 1.5 million to 1.6 million barrels a day. So
Oh my
literally
goodness.
twice the expectation. And
It's
that is
crazy.
obviously a huge volume difference. So last year we had a lot of growth in the US. We had a lot of growth in the offshore kind of star players right now in Latin America, in Guyana and Brazil. And a lot of this was unexpected in terms of its, strength.
Right.
So even though demand grew really strong, supply grew that much stronger, which pushed OPEC to do these kind of perpetual cuts. So we
Yeah.
had multiple cuts. We had a cut in October of 22. We had a cut in April of 23. We had another cut in June of 23. And then finally another cut by the end of the year that takes effect, and takes effect in January now.
Yeah.
Um, and I think one of the things that's shocking is when we think about the oil market as being reasonably strong right now, a lot of that is because OPEC has cut so much, which is kind of a dicey situation to depend on in terms of a go forward basis. Because with the exclusion of the COVID cuts, OPEC is now withholding more production from the market than at
Yeah.
any point since the global financial crisis, which
Right.
is really not a great reference point, given the fact that normally you'd expect those cuts to be happening in years where demand is really, really weak.
Yeah.
But demand was actually really strong last year. So I think
Right.
that's this kind of situation, is that if we don't see, and I should say now, the EIA expects, and both the EIA and OPEC expect US production growth to go from 1.5 down to like 0.3 this year. So they expect a complete collapse in the growth of US shale.
Yeah.
But a lot of people were wrong about it last year. So I think there's going to be this open question of like, I don't know, maybe you can tell me in Houston, are we going to grow? Because that is obviously one of the biggest questions in the oil market this year is the expected slowdown in US shale actually going to come this year?
Right. And then again, to answer that question, and someone who follows rig count and who's directly, conversing with operators on a daily basis, I don't think we are. You just look at the activity, the frac spread count, the duct count, like there's just to all of a sudden ramp or increase production the way we saw it, when all the data would show signs of it slowing down. Just again, unless there's like a breakthrough in completions technology, which
Yep.
it takes time for all that to be adopted at scale. I say that, but last year I was like,
Last
there's
year
no
was such a
way.
curveball. It was such a curveball, right? I mean, we
I
actually
know.
saw rig counts in many cases. I need to double check my numbers, but rig counts were trending down for almost all of last year because
Yeah.
prices were much weaker. So
Yeah.
I think everyone expected production to slow down, but
But
then the
when,
story
yeah,
ended up being longer laterals completed more quickly. And I
yeah.
think, so we were doing a lot, or I should say, you guys were doing much more with far less.
Yeah.
And I
And
think that's the ultimate question.
it is. And when you look, and I want to give a big shout out to Ted Cross over at Novi Labs. He puts out such good information.
Mm-hmm.
Looking at, when some of the best wells were put online, looked like 2021 was kind of like the highlight year. 2022 was good, 2023, okay. But as these new wells come on and as operators go out to more fringier assets, meaning, all the best wells, again, people will argue this till the cows come home, but it's the theme is that some of the best wells have been drilled.
Yep.
Again, I always trying to think, okay, like what could undermine this idea? You know what I
Yep.
mean? And it's really tough to say. But when let's just assume, and when you look at like DNC spending, drilling completion spending, and capex, like a lot of the operators that I'm talking to, they haven't like publicly released their sort of capex numbers and their budget. Obviously, that'll be rolling through here over the next few weeks as earnings season just really gets going. You're not seeing too many people spending more money than they did last year on
Mm-hmm.
drilling and completing. So, I mean, I would
Right.
say flat is kind of like par for the course right now would be my guess. But in saying all that, let's just make the assumptions like, okay, we might get to, we might stay above 13. And if we do, looking at your information, I think like Saudi and maybe Abu Dhabi have quite a bit of capacity. And let's just call it OPEC. Like,
Mm-hmm.
at what point do they then to slap around the little guys who maybe weren't cooperating, and maybe to put a little bit of, pain onto to here in the US. Like, do you think they're going to all of a sudden flood the market and try and like make a point, or are they just going to like be okay with, 70 to $80 a barrel oil? And I mean, that's obviously like the big question, right? But like, what's your take on that?
I think the biggest downside risk to the oil market right now is this overhang of OPEC spare capacity, that's just hanging in the wings. And it's even larger in many cases than the cuts that have actually been committed because you had mentioned Abu Dhabi. So the UAE has its baseline against which its cuts are calculated is 1 million barrels a day, but below its latest IEA assessed capacity. So you've got 1 million barrels a day on top of anything that UAE is currently cutting that they theoretically eventually want to produce. So I will say that it's absolutely a risk. I think what you've seen historically, I mean, if you want to look at the most, I'll do the bear and the bull take here because I think that's probably the fairest way to do it. So the bear take is you look back to, let's say, the mid 80s. So there's a reason, and I think one of the weirdest things of last year was the degree to which Saudi Arabia embarked on a bunch of these unilateral cuts, or what Saudi Energy Minister Abdulaziz bin Salman called the lollipop cut. It was a 1 million barrel of unilateral cut. The reason that the Saudis have not historically liked to do that, and by historically I mean for the prior 40 years, was that the last time they did that in the mid 80s, they unilaterally cut when the price shocks of the 70s, and early 70s and late 70s, spurred all this new supply to come online, and the shale of the day, the big growth area of the day was the North Sea. At one point in the mid 80s, I think it was the summer of 1985, Saudi Arabia was producing less crude oil than the British portion of the North Sea, and the king of Saudi Arabia was like, this is stupid. So then they basically flooded the market. And basically, so when we think about the oil glut and the kind of weak price environment, it's called the lost decade of the mid 80s through the early 90s. That was essentially coming to terms with this market share battle that the Saudis unleashed on the world. That's the bear case. I think if you see something like that, we're not in anywhere near as bad a situation as we were then, I should say. So I don't think the risk is nearly as high. But so that's the risk. That's it. On the bull side, what we have seen to date is the Saudis being much more bullish and much more supportive of the price than they had been over the past couple decades. I think historically with an OPEC, Saudi Arabia has actually been a reasonable dove. They didn't seem to want high prices for the sake of high prices. They wanted to maintain economic stability. They wanted to maintain geopolitical alliances. They wanted to maintain oil demand growth because they're in it for the long haul. So they didn't actually have that much of an interest in high prices for those, for that own sake. But with, over the past couple of years, following the ascension of MBS to the kind of heights of Saudi government, and that now ABS, his half brother, leading the oil ministry, the first royal to hold the position of energy minister in the kingdom's history. All that together, you have just seen much more support for the oil price, both rhetorically in their media commentary, but also in their actions and support. So I think they have done so much at this point, it seems unlikely that they're going to do an abrupt about face.
Yeah.
But I think, let's say we have another year where US supply grew 1.5 million barrels a day. I think if that happened, I think that conversation changes very quickly. I think they felt very comfortable last year supporting the market to the degree they did because they didn't think US shale was going to grow as quickly as it did. They were assured by many people, there's no way US shale is going to grow that fast again. And lo and behold, it did. So I think the concern now is if we do get another year of really strong growth, then I think that commitment starts to wobble and waver. Maybe not in Saudi, but definitely in the rest of the OPEC members. And then it becomes this kind of question of how do you regain cohesion in the group? They have no real mechanism to do it except for punishment by Saudi opening the gates and tanking the price of crude. So that again that's where it becomes a challenge. But I don't think the US, I should put my cards on the table here. I think that US shale growth this year will also slow dramatically. I did not expect shale growth to be 1.5 million barrels a day last year. So I think I was surprised like anyone else. And I think that I would be very surprised if we saw that again this year. But I think that is the risk. And my
Yeah.
only caution, I've been in the industry long enough to not discount the possibility that US
Yeah.
shale is going to surprise to the upside.
Right. No, that's true. And I would have to think that looking if OPEC's looking at the US and they're reading what we're doing and they just look at our activity, like there's nothing saying like there's nothing supporting the idea that like look at the US, they're just trying to produce as much as possible. Like the whole volume over value game is dead. And now it's like, everyone's trying to reduce debt and reward shareholders and reduce rig count and consolidate. And it's like it's more like, hey, we need to maintain and be disciplined, not just like spend because the demand's high. We're just going to try and fill every gap we can with oil. Like that's not our intent. And so, I think, at least, but
I mean, that's the narrative, right? And I think that the challenge is that I think that that was my expectation, and combine cash flow discipline, kind of finding the religion of cash flow discipline with supply chain bottlenecks that were rampant, let's say through 2022 in the US shale patch. Um, I just don't think anyone expected it to grow as fast as it did last year. And I think that that's just the latest reminder that, well, let's just temper our expectations and at least be conservative in our expectation for how quickly US shale will slow. But I agree. I have it baked into my expectations, and I'm ready to get hurt again, you know? That's
yeah, yeah, no, getting punched the second time doesn't hurt nearly as bad. So
nah.
we'll see. Man, Rory, this has been good. I mean, clearly we've blown through an hour. I feel like I had like
Wow.
8 other questions that I was going to ask, but clearly we'll have to do a round two at some point in the future. And again, if for the listeners that want more, Rory, just briefly tell them where they can find you. And then I'll put all the links in the show notes so you don't have to spell it out. But what's the easiest way to find your Substack and then for where you are online?
Yeah, so I mean, so all of my research right now is published at commoditycontext.com on Substack.
Perfect.
And then I'm, riffing off most of this stuff, way too much through the day on Twitter, where I'm at Rory_Johnston.
Perfect.
But yeah, I live and breathe this stuff most every day. So come chat about oil. I'm always happy.
Awesome. Well, one last question I have, and has nothing to do with oil markets, but with how busy you are, I mean, again, commodity markets are nonstop, 24/7. They're constantly moving. You've got kids, husband, dad, the whole rest of it. Are there any daily habits or routines that you have to help you disconnect and stay sort of charged up? I mean, because again, you can't pour from an empty cup. And I feel like the way you move and how much you're doing, you're riding the line there. I mean, is there anything daily that you do to unplug?
I think sadly my habits on that are probably not as good as they should be, but I think
Okay,
my honestly saving grace, both in terms of running this company and maintaining my sanity, is my wife, who I
nice.
think we always carve out time every night to just chat. And I think that alone just provides me with kind of immeasurable kind of cup filling in that regard. So even if I don't have the best habits, I think
Yeah.
she always keeps me sane. And I think that's essential in these moments in life.
Yeah, no, I love to hear that, man. As a family man myself, with a beautiful wife and family at home, the support system I have there is just amazing, which clearly helps on a daily basis. To your point, so Rory, again, thank you so much. Keep doing your good work, and for everyone out there, let's always make sure that we're approaching the energy landscape with a radically open mind. Be kind, and always remember that everyone deserves access to energy, and we is greater than me. Thanks, everybody.
Thank you.